What's up? Good morning, everybody. Hope you guys are doing well. It is storming like crazy outside right now here in Texas. So if you hear some thunder behind me, we got a good old Texas thunderstorm brewing outside. So big news today, GDP coming out, red folder. Last night I did do some analysis. I did not tweet this out. So I even hate to share this with you because it may just seem like I'm cherry picking. But this was my dollar analysis last night going in. I thought I'm still bearish dollar. I think the dollar is going to melt. We have this big monthly fair value gap right here that I think we're going to eventually close. We're definitely going to take out these equal lows. It is the end of the month, so I don't know if we do that honestly in the next couple of days, if we close at the bottom potentially, but open high low close means that we may be just consolidating until next week, and then when May starts, maybe get a pop up and then come down. But anyway, my overnight analysis was that we would get a run back above these highs into this breaker block right here. This down candle was the last down candle before we had this run up to take out liquidity above this old high, and then we broke back through it with strong displacement, and yeah, so I was just, I think, and it didn't quite get where I was going, at least currently at 6:03 a.m. on Thursday, April 27th. So you can see I put this in at, what was that? I don't know, like 8 o'clock last night, Central Standard Time. That's when I dropped that right there. Came back up in London, got close, and it may still pop up. Maybe the news throws this up in here before we drop lower. Now, in light of that, this is what I have for pound dollar, because I thought the dollar would rise a little bit. I thought the pound would obviously fall in correlation. If the dollar's strong, the foreigners are showing strength. The foreign currency pairs against it would show some weakness. And so this is where again, very similar to this, thought it would come above these highs. I thought it would come down below this low and rebalance this aggressive down up move a little bit more, and it did. So it popped in at 5 a.m. and now we're climbing higher. Here's the disclaimer: I did not take this trade on any of my funded accounts. I did not set this as a limit order. I wish I had. Now, see, I put this in. Man, I'm horrible at reading 24-hour time. What's that, like 9 o'clock, 8 o'clock, 8:30? I don't know. That's when I set all this up. Haven't touched it since. And there it sits. And so I would be at break even for sure right now if I was in this trade, but I'm not in this trade. I did call this trade yesterday on this stream right here, and it basically had zero drawdown. I want to say it was like a 1 to 3. It's like one. It was just targeting these highs, I think. I called that yesterday live on the stream. But this one doing really well, playing out very nicely. Again, it may, when the news hits at 8:30, it may pop back down. That's why I would be at break even. I don't know. I don't like to trade big red folder news like GDP, CPI, NFP. The big movers where the volatility is so crazy that it doesn't matter what position you have or what limit order you have. You're going to get slipped. Your account's going to get blown. and you don't know what those numbers are going to be. No one does. Well, some people do. The banks do, I think. So anyway, I can only be on for about an hour today. I've got some real life stuff I've got to take care of. My two golden doodles are going to doggy daycare today. And one of them has been multiple times. The other one is going for the first time, and they have to do an evaluation to make sure that she's going to play nice. And fingers crossed. So we just moved into a new townhome, and we do have a tiny little bitty backyard in this community we're in. But they need to stress their legs a little bit more, so hopefully she passes her evaluation and we can continue to keep taking her so she can run and play fetch and swim in the pool and do all the dog stuff the dogs like to do. So anyway, I've got to do that. Probably have to get off right around 7 a.m. here, Central Standard Time, in about 53 minutes. But until then, jump in the chat and yeah, we'll just talk. So that's my pound. Let's jump over to where I did set my limit order on EURUSD. So this is the part of trading that people that just fry people's emotions and brains and psychology. You analyzed, you looked at a couple different pairs, you did your correlation against dollar strength and weakness, and you're like, okay, I've done my analysis. This is where I think it's going. So I did not set a limit order on the pound dollar, but I did set one on two of my challenge accounts for EURUSD. And you can see pound playing out nicely. Euro being a little whiny. Beep. So yeah, stuff like this can be a little frustrating, but the trade's still valid. We still have news, and even if it climbs up over the next hour and a half, maybe to attack these highs, then news might just, because if you've seen news, it may just whipsaw, bam, bam, and tag us in and move up. But like I said, because I'm not in the trade and because the London session didn't cooperate, I'm gonna delete this limit order, because if I wasn't already in the trade, I'm not going to play around and GDP moves just whipsaw up, down, back and forth, and take out both sides before moving to wherever it wants to go. So yeah, this limit order has been deleted. This was my alert that I had set up on my phone, so if it tagged me in overnight while I was asleep, I could get up and at least be notified and then have a restless night's sleep, watching and waiting to move to break even or take a loss, which I'm fully prepared to do every time I take a position. Yes, I want to delete that. So my overall thoughts on the EURUSD are still that with all of these equal lows right here, it's going to pop down. It's going to take out liquidity, try to rebalance some of these imbalances and price ranges that it's left behind down here before it runs up into this weekly volume imbalance right here. And you can see I've got, this is an old high inside of there that I would be targeting initially, but it's going to fill in this whole thing. It's going to fill in this whole thing. It's where it's going. It may take a couple weeks to get there, and it's going to bounce around a little bit while that's happening, but it's going to get there. It's our weekly volume imbalance that we're aiming for on the EURUSD here. So again, I'm not expecting price to come back down in here. Now with GDP news, we do have a lot of retail mindset is going to be looking at, oh, look at this pretty trend line and, you know, whatever, support, resistance. So very likely a possibility, because you don't know what's going to happen, is that the euro melts a little bit, takes out some of these relative equal lows here, relative equal lows here, blasts through retail traders that are using this trend line, and just grabs a lot of this liquidity down here before it runs up into filling this weekly volume imbalance. So I am bullish on foreign pairs against USD right now. So it's kind of my take. I'm kind of pissed that it didn't put me in on this. It did put me in on this last night. If I had, well, my analysis is correct. I didn't set a limit order on this, but that's where I wanted it to go, and it's gone. But again, with this red folder news coming out at 8:30, my rules say I don't trade red folder news. Like, I'm not going to get into a position when the news hits. I will wait until after the news craziness does whatever it's going to do, and then I'll look for an opportunity to engage if I see one. But is what it is. Didn't pick the right pair to set my limit order on. I just felt stronger about euro dollar, but it just didn't cooperate, unfortunately. The dollar index here just didn't move back up to where I thought it would go. And that's okay, that happens. So let's, that's euro, that's pound, dollar index, USD CAD, sitting inside this daily fair value gap at an order block. We've had a break of structure here, so we're just sitting in this nasty range on dollar CAD on the daily time frame. You can see it probably better. I mean, this is the weekly. It's just it's just ugly. Because I'm bearish overall on dollar, I would most likely expect this to collapse and take out this liquidity down here. We've already taken out buy side liquidity up here. We broke down, we've come back up into an OTE optimal trade entry right here on the daily time frame, and now we're just kind of consolidating around underneath it. But I would expect these lows down here to get run in the next couple weeks as we get into May. That's what I'm thinking on dollar CAD. Currently on lower time frames, it's just, yeah, this fair value gap and this order block structure here is holding, but besides that, it's not really doing much. Just bouncing around, waiting for the news to hit to provide the volatility it needs. Could come up back into this 4-hour order block right here. Maybe 50% of it hasn't quite gotten there yet before it drops down. It's got a lot of imbalances down here that I may want to come get to. So it's kind of how I see dollar CAD. Bitcoin. Everybody's, man, we had that flash crash yesterday. Where was it? Yeah, right here. Climb up and then bam, something happened right at the end of the trading session yesterday afternoon. Somebody sold a bunch of crap or something. I don't trade this, but I do like to analyze and keep up with it. If central banks are going to introduce central digital currencies, they need other cryptocurrencies that they can't control to fail. this is why I'm bearish. I think this is going to go back down. I don't know when. You can see on the weekly time frame. Grab liquidity, we bounce around, we've had a break of structure, we're right back up into this order block. We do have some fair value gaps and imbalances up here above this old high. And maybe we try to get there before we come back down, but I mean, yeah. Does anybody ever really know what crypto is going to do? I don't know. I think the ITC smart money concepts, I've heard other people say that they work on crypto. I have not seen that play out. Sometimes they do, sometimes they don't. It's the market. People are putting in orders. Does the algo run? Same algo that runs on indices and these major Forex pairs. Does it run on crypto? I don't know. Pound yen. Consolidation. Name of the game, it seems, here at the end of the month is just keep everything in a tight range and don't trend. So you've got a lot of equal lows, relative equal lows down here. Then I'm guessing price is going to want to come into. You've got this fair value gap down here. This is a breaker block. Big bullish candle up. Comes down, takes out the lows. I'm sorry. I did not do that correctly. That is not what I would be looking at. I mean, I guess technically it could be up, down, take out lows, break the high. And so this then becomes breaker block to see the pound continue to rise. So it could come back down into here, which is, 50%. All of these really are the breaker block. So it could come back down into here, maybe into that fair value gap before it wants to run up higher. If you look at that daily, again, we're just in this tight little range. We went from a range to a lower range, and now we're back into this range. All of this right here. I mean, look at, there's no trend in here. It's just gross. You can find trends on lower time frames, but I like to trade in the direction of my higher time frame bias. Find entries on 1 hour, 30 minute, 15 minute. I used to trade down on the 5 minute quite a bit and felt a lot of challenges doing that, and have been much more consistent with my win rate and profitability when that is on the 15 minute at the lowest, when I just stay in line with my bias from daily areas and then find entries around order blocks, breaker blocks, and imbalances. Try to keep it simple. Gold, daily, it's much the same story, man. End of the month, everything's keeping in a tight range. Nothing's really happening. Just bouncing around. There's no clear direction. It's just engineering liquidity as we head into May. S&P 500. This is XPX on ACAP, because that's what. Don't trade futures on these challenges. You're actually trading the I call them CFDs. Okay. But this is the S&P 500 chart, which correlates to the ES or whatever it is happens to be right now. On the daily, you can see this this high was taken out, and then we've dropped back down and now had a break of structure. We have left behind a daily fair value gap. Thursday, Friday. So this is Monday, Tuesday, Wednesday, Thursday. So we've opened high. Where's the low going to be? Where's it going to close? That's the question. Do we get a back above today, yesterday's high, into that fair value gap before we drop lower? Or with the news, do we just drop down in and kind of rebalance some of these fair value gaps over here? Don't know. This down candle. So if you see this right here, see that check mark? Red check mark, right? Bam, bam, bam. This down candle, these two down candles were the higher low because we had changed structure, correct? Okay. So as it comes up, it takes out that high and makes a higher high. And then the next move breaks this order block, does not hold. It breaks through it and leaves behind an imbalance. So this is now daily breaker, these two candles together. Here's your daily breaker. We've closed below it yesterday. I like to use the most recent. We're back inside it right now, and 50% of that is, just eyeballing it. Somewhere right in here, up near Tuesday's close, is where I would be looking for price maybe to come back up into this morning. So if we drop a line right there, Tuesday's close, come down into the 4 hour, what do we find? Find an imbalance right around there at that same time. You've got a 4 hour order block right here, these three candles. I don't see any, there's a small imbalance, didn't respect it. The order block is what that 4 hour order block right here is what I would be most interested in. Right there. On the 1 hour, do have that volume imbalance right here. This was the rollover of the day, left behind that imbalance. You had this big imbalance here, it's filled it in, and we've had a close above it. This is still a valid 1 hour order block. Price is allowed to wick up. This again, remember this red line is the close, Tuesday's close, which is actually right there. So it could wick up into that again. As long as I don't get a body close above there, I would still remain bearish on this. This green box is the daily breaker. So 30-minute, got an order. This is the last little order block here. Small little fair value gap right there. We just reached into it. You can see right here. Just reached into that 30-minute fair value gap. So maybe the news, you get a little whip up and then a drop down. But where would I be looking? I would be looking for obviously this low. The low from yesterday is be our first target. This low on Thursday the 30th. And then you've got, there's some imbalance here, there's some imbalance here, and you've got some lows down here. So at least yesterday's low and maybe the Thursday, March 30th. That down candle right there, that 10 a.m. These are all New York Standard Time. I'm on New York Standard Time. All right. 626. So that's the S&P. All right. So we are just looking around. I'm going to jump on Twitter. It's making me do this two-factor authentication thing, so bear with me. All right. Euro dollar coming back down. Pound. Just holding strong. What's the dollar doing? Making a smaller rally. It's just hovering around all night. It's just gonna do this until 8:30. It's just what it's gonna do. There's really not much to look at here. So, what, let's talk a little psychology. You can have the best trading system and strategy in the world with all of the data that you need to know that when these setups appear, that 80-90% of the time it's going to get at least 1 to 1, 1.5, 1 to 2, whatever it is. You can have that locked up. But if you cannot control yourself, if you do not have the self-discipline that you need to execute and have proper risk management and trade management, you'll still be unprofitable, you'll still fail challenges, you still won't get funded, you still won't have any payouts. This industry, this business is all about self-discipline. It's not about the trading. The systems and strategies, man, you can use indicators if you want. I don't recommend it. You can trade support and resistance. You can trade smart money concepts. You can trade order blocks, breaker blocks, market maker sell models, market maker buy models, IDR, RDR, ODR, NWOG, NDOG, consequent encroachment, OTE. I mean, it goes on and on. There's all kinds of profitable trading strategy out there. It's not about the strategy. It's not the strategy. It's you. You are the obstacle standing in the way of profitability. Your psychology, your mental game, your self-discipline, your greed, your fear. You learn more about yourself in trading than you ever learn about trading. Anyone can learn how to properly size a position based on a stop loss. Anybody can learn an MA crossover strategy. Anybody can learn what an order block is, or a breaker block is, or a fair value gap is. But executing them and being patient for the trade setup coming into play, that's the hardest part. And then taking a loss when that strategy does not work, either right away or goes through a series of losses. That's where people lose this game. That's where people get out. That's where people can't handle it. That's where the 95% of people are gone after whatever it is, a year, 2 years, 3 years. Everyone expects this to be easy, get rich quick, easy, whatever. You can make money trading Forex, indices, metals, whatever. Anybody can get lucky. Anybody can go in and push a button. No one knows where the market's going to go. We all have our tools that we use to predict and analyze and forecast. We don't know. And so that's why anybody can go in and literally just push a button and make money and not do anything else. They don't have to have a bias. They don't have to have analysis. They can just go in, push buy or sell, and then walk away, and they can make money. That doesn't mean that they're going to be able to do that every time they sit down consistently. So people see social media and they see all this other crap online of Lamborghinis and gurus making all this money and showing hindsight trades and selling courses, and a lot of these people aren't making money actually trading. I want to be a full-time trader. I don't want to have a 9-to-5 to depend on. And a lot of you probably feel the exact same way. So how do you do that? How do you get there? Well, patience. I called this Venator trading. Venator is Latin for hunter. And when you're hunting, you have to think of trading like you're hunting. You don't just go in when you're hunting and be loud and noisy and impatient, shoot and pull the trigger at the first sign of movement through the trees or the brush. You wait, you stalk, you hunt. That's what hunting is. You're quiet and you're patient, and you use discipline, and you're ready to execute and take down the big trophy buck when every condition is met, and then it reveals itself and shows itself and walks right into your shooting lane that you can take it down. So that's what we have to do to be profitable. We have to wait. We have to be patient. I shared this yesterday, but I think it was my funded FX. I have 2 challenges going with them right now: 100K, 250K, and what was I saying? Oh yeah, so they're very active on Twitter, social media, and so they shared recently, I don't know, like a week or so ago, that the majority of people who get the majority of the payouts that they send to their funded traders. So you have the pie, the whole pie, right? of payouts. Well, the majority of that pie on payouts goes to the traders who are only trading, I want to say it was like 8 to 12 trades per month. Per month. You're not taking that few trades without being patient and waiting and executing on your setups. You're not sitting on the 1 minute time frame or the 5 minute time frame and only going to take 8 to 12 trades a month. Those traders, I think it was like less than 5% of the payout goes to those kinds of funded traders. So what does that mean? It means quality over quantity. It means you're looking for the primo, most high probability trade setups that are in line with your higher time frame bias. And you wait. You're waiting for price to be delivered to your specific spot at a specific time, because you don't want to just get in at any time because there's no liquidity, there's no volume, there's no volatility, whatever it is. So the London kill zone, the New York kill zone, the London close, those kinds of times, those are the places that you're looking for time to get and create your setups. And you're watching 1 or 2 pairs, you're not trading 10 different pairs. And you're just waiting. And these guys are taking 8 to 12 trades a month, are taking home 95% of the millions of dollars of payouts that MyFundedFX at least is sending out. I don't know, the other prop firms haven't been as transparent and haven't shared what their info is on that kind of stuff. I love that MyFundedFX is doing that. It's super helpful. Hey, I don't know, Ash, I just saw your comment. I don't know if you're still here or not. What will happen to gold after the GDP result? I don't know. If I knew that, I'd be rich. If anybody knew that, they'd be rich. As I said, gold is just end of the month. It's just nasty. It's not doing anything. It's consolidation. It's engineered liquidity. You have buy side liquidity up here. You've got sell side liquidity down here, and it's stuck in the middle of that range right now. So who knows what's going to happen to gold when the GDP news releases. It could very well pop up, take out buy side, and drop down. Because I'm bearish on the dollar, I would expect gold to keep going up overall. I don't know if that's going to happen today or if the news is going to do that. You also have news Friday with the core price index, personal income. That's another opportunity to provide volatility into the market. We're at the end of the month, and so there's just not a lot of stuff going on. So I hesitate to tell you what gold's going to do when the GDP news releases, because nobody knows. That's why we don't trade red folder news. You don't know. You have to wait for the news to come out. Let the market show you, leave the clues where it wants to go and what it wants to do. It's going to, typically it uses news to grab liquidity and then move in the opposite direction. The news just provides the volatility that the algo needs to find orders that it needs to collect to move in the opposite direction. So if the news is bearish for the dollar, you could see a pop down, maybe grab some of this liquidity here and then shoot up. You could just see it just shoot straight up, because you've got buy side liquidity here and you've got more buy side liquidity up here at 2048. So I don't know what it's going to do. You've got some imbalances up here on the buy side. You've got some imbalances down below that haven't been filled either. So this is just a disgusting range. I'm not interested in trading gold right now. It's not trending. It's not doing anything. It's just in consolidation. It's literally moving straight across the screen. It's just engineering liquidity. So maybe it's the news this week. Maybe it's the red folder news next week as we get into the first week of May. You've got some job openings and PMI information next week too. So eventually it's not just going to sit around here, and that's what then we're going to want to get involved with gold. If you try to trade gold every day, I don't know how or what you're looking for in here, because it's just stuck, absolutely stuck, consolidated, tight range, no fun. I'm sure there are guys that love trading ranges. That's not who I am. I want to trade with a trend and with a higher time frame overall bias. And when price does this, I just tend to avoid, if at all possible. So, hope that answers your question. I did not have my chat up. I don't know when you asked that question, but all right. Let's see. Anyway, back to psychology. Talking about just being self-disciplined, man. If you can't be self-disciplined, if you can't control yourself, if you can't control your greed, you can't control the itch to just be in the market, then I don't know what to tell you. Like, you're gonna fail. You're gonna keep failing challenges. You're not gonna ever get funded, and you're not gonna get payouts. You're just gonna waste your time. This is not a game. This is not anything to mess around with. Like, get your crap together. Get out of your own way. You want what you want, and you're standing in your own way of success. Don't sign up to a signal service. Can they be helpful? Yeah. I'm actually in a group with a guy named Grant FX Finesse. In fact, he's probably one of the better mentors out there, especially when it comes to ICT, smart money concepts. Been with him for a while. I'm in other groups, but his has probably been the most helpful. And he will call trades out there for you. Sometimes I use them. Most of the time I'm just using my own analysis now, and just from what I've learned and how he's simplified the approach to identify order blocks, breaker blocks, imbalances, busy cities, fair value gaps, whatever you want to call those things. Identifying liquidity and higher time frame biases and all that kind of stuff. But man, if you're not learning how to do this on your own, if you're just relying on someone to spoon feed you, I don't know how you're ever going to be successful. Long term, you might find some short term success, but you want to be in this long term, you've got to learn how to do this on your own. So, euro dollar coming back down to these equal lows. The market does not like to leave nice pretty lines. It's gonna stab down and take out the liquidity under here, fill in this fair value gap, and hopefully reverse. It's kind of my prediction. I have not canceled this order yet because we still have 8 o'clock. We still have 30 minutes of news. If this could tag in and then head up before the news. But if within like 5 minutes of the news, if I haven't been entered, I'll just cancel the limit order And you can see pound is still strong. Dollar is coming back up. You can see how much the dollar needs to move to take out these equal highs versus how much the euro needs to move to take out these lows. The euro's about to take out these lows, and the dollar still got a lot of meat on the bone to get back up here. So we could be seeing some SMT between the dollar and the euro dollar. If the euro comes down and stabs out, takes out these lows and then reverses, and the dollar does not, that's a good sign that euro is going to be strong and show strength and move up. The dollar couldn't take out and make a new high, while the euro did make a new low. It hasn't happened yet. I'm just saying, I'm watching that, keeping my eye on it. All right. The song's kind of annoying. All right, I'm going to be on for about 10 more minutes. And then, like I said, I've got to go. I don't know if I'm even going to do this doggy daycare thing right now. It is storming outside, and I do not feel like taking my dogs. And they're just going to keep them locked up inside. So I don't even know what the point is of taking her today. So, may just need to do that tomorrow. Weather's supposed to be beautiful here tomorrow. We'll see. Right now, we're just watching this Euros trade. We're not in yet. Framing this on a 30-minute time frame using this order block and this fair value gap. If price wants to respect bullish PD arrays, price delivery array. We were in premium. Want to move back into a discount area. It's not quite 50%, but this is the order block that I am anticipating it to respect. If you look over here, you have a breaker block right here. So this up candle took out lows, came back through, broke through. You could also say this is a breaker block. These are all breaker blocks because this you swept liquidity and then you just shot back up and broke through in disrespecting. So a breaker block is an order block that's been broken, and when it comes back to it, it acts as quote unquote resistance or support depending on which way it was going. So in this case, we would be anticipating this up candle and this down candle to act as support as price comes back down and tags liquidity that's below these equal lows. If price ignores that order block and breaks through, just doesn't respect that fair value gap at all, then we would be wrong for our bias for the day, and we would be expecting price to continue down further to fill in a PD array down here somewhere. Now you can see on a 30-minute time frame, we have several fair value gaps down here that it could be, if it wants to blow past this, where it could be aiming. So that's how this trade was framed. Relative equal lows, fair value gap, displacement, order block. So you can see price is just holding steady right there. Maybe at the hour flip, this thing pops in, tags it, it starts running for these highs and then eventually yesterday's high. Eventually, either today or tomorrow, it'd be great to see it at least tap this weekly volume imbalance up here. I'd love to see that today or tomorrow. I don't know if we'll get there. I don't know if GDP does it, or if Euro GDP does it, or if personal income and core PCE does it. And we've got the news to get us there, to give us that volatility. It is the end of the month, so we'll see. Friday will be the last trading day of the month. So does it kind of wick? Does it want to leave? Or does it not want to leave a wick? I don't know. Yeah. That's what we're looking at. Here we go. All right. I'm going to take a bathroom break real quick. And then I'll be back for just a few more minutes to wrap it up. And then, yeah, I'll be signing off. So be right back. Give me about a couple minutes. All right, we're back. Just had to take care of a couple little things. All right, about to just started open the new hour. If you look at the hourly time frame, you can see the liquidity built up right here. This is your 1 hour breaker block, up move, down move, take out liquidity, reverse. So if it comes down, take out this liquidity. Stop may be a little tight on that, but we'll see. Dollar still has some room to go to take out these equal highs, and euro is way closer to taking out those lows. May already did. The low here was 10.304 and 309. So yeah, pop through these lows a little bit. I mean, just touched them. I would like to see a more like stab down in and fill in that fair value gap. That's what I'm looking for. Maybe we'll get it. Pound is very strong against the dollar right now. And this is when you're like, why did I not set a limit order on this pair? It's frustrating. Very frustrating. An order block formed right here now. This down candle. Oops. This down candle right here, big pink candle, is an order block. We have broken back above it, and you've no candle wicks here on this hourly candle. Price comes back down probably to here on news and then proceeds higher. But right now it's on a tear. On a tear. All right, it is now 7:05. I need to go take care of some real life stuff with my dogs. So I will be back tomorrow about the same time, 6 a.m. and we'll do it again. So we head into the New York kill zone for Forex pairs. I'll be active on Twitter, so follow me over there at Venator Trading on Twitter. And yeah, hit me up. So happy hunting. Be patient. Wait for your setups to be clear and then execute. Small loss, break even, small win, or big win. Those are the only 4 outcomes we have available to us. So happy hunting, and we'll see you guys